G'day there. Welcome to the closing bell on the 22nd of April. I'm recording it on the Thursday because I'm heading off somewhere tomorrow. And oh my word, is this market boring? I've decided just to do a bit of a session on my setup and model and give you a bit of an outline of some technical analysis tips and ideas for people who maybe have been watching these videos but might be scratching their head over a few things. So I thought I'd spend time doing that rather than rehashing over old ground with this current market just stuck and volume drying up, coming in and seeing that the US market's been up 1 point or down 2 or whatever all week. It's been pretty deadly. And this is what happens. I have explained this to you in the past about how price action can sometimes, and this is the monthly chart of the S&P 500 there. We've got the correction over the last year, and it's currently just right in the midpoint. And I went over this last week. We're at the 20-month moving average. We're at the midpoint of the whole correction. And it's just the point where everyone's scratching their head. Is it going to break up? Is it going to continue to the downside? And basically, it's a wait and see situation with short-term momentum up and longer-term momentum down, with the monthly trend down. So it really is a flip a coin situation for me. I'm waiting to see whether it can bust through that 20-month, bust through the key level and have a spike. I'm worried that there's lots of selling pressure up there. Or it could just meet a brick wall here, as it has for the past year. And if it rolls over again, all of a sudden, momentum can turn back down pretty quickly, and it's pretty disastrous below last year's low. I'd expect a really big clear out below there. But you know all that if you've been watching the video, and that's why I don't want to spend time on it today. So let's have a look at a stock that I think gives a good indication of the things that I look for. So this is Newcrest Mining, and I thought it would be a good idea just to take you through it today while the market's so dull. Just to give you a bit of an insight into a few things. If you have been watching these videos, you should remember that I told you when Newcrest Mining was below $20 that it was coming up on my screening as a good opportunity. And I think, a few months down the track, and we actually bought it in one of my services, Retirement Trader, and it's been a great trade. You can see a nice sharp move to the upside, and that's what you really want, is a stock that you buy and then it just takes off like a rocket for months. Very rare occurrence. This stock has sold off for years, so it's easier said than done. I thought I'd just take you through again, to understand why I picked that up as an opportunity, and to hopefully help you, understand that this technical analysis thing sometimes does actually work, and to give you an overview of that model that I use. There are a number of different factors that all add up together. You've got the moving averages, which I use. That's pretty simple. Everyone looks at those. I don't use them to trade. I use them more as a sense of momentum and to help me understand what the bigger trends are. So I've got the 10-month exponential, 20 months simple, and then I've got the Bollinger Bands around the 20-month moving average. They're those white lines there. So I've got the 1 and 2 standard deviation Bollinger Band either side. So that gives me a sense of volatility. So as volatility shrinks, like in this situation, when the Bollinger Bands get close together, I'm waiting for a volatility breakout when things are going to pick back up again. Similar here. You can see the Bollinger Bands getting very close together. I'm looking then for a volatility breakout for things to take off again and start moving. But also I'm using it to look at trends on those Bollinger Bands, and to get a sense of when something's trending up, I'm looking at the 1 and 2 standard deviation. I've even got the 3 standard deviation Bollinger Band there, which I'll tell you about in a second, which helps me with change of trend. But when the market's trending up, I can be watching on these monthlies. And as you know, if I'm saying the 20-month moving average is a key moving average, well, you're usually going to get volatility around that, aren't you? That's the idea. And these Bollinger Bands sort of help me get the sense of the extremity on the downside of where I want to see support coming in these trends. So I'm, following along those Bollinger Bands and saying, well, if this thing is trending up and we're getting volatility around that 20-month, I'm looking for those areas, 1 to 2 standard deviation below in the uptrend. So, I'm watching that area and just saying there should be, buying support. And you can see when it's strong, it doesn't even make it there. But you can see here quite clearly a nice example of a big sell-off, but the overall trend still to the upside. And I'm looking for those moments, and when I then get, monthly buy pivot coming in. So reversals out of very important support zones is areas that I can be starting to look for opportunities. So you can see again on the upside there, there's also pulled back there. But then, you can see it's not something that works all the time, because we've got the trend turning down, the monthly trend. So, you're getting more wary when the monthly trend is turning down. And then I'm sort of looking at the 3 standard deviation Bollinger Band. If I'm following that along, that 3 standard deviation below, I'm saying, well, I sort of need it to have a monthly close below the highest point of that 3 standard deviation Bollinger Band. Not a bad way to track the trend as it's going up. And if we get that close below, it's like, well, now this is pretty serious. Watch out. If I'm long, I might be considering, dumping stock there. And also, you're sort of looking then for change of trend on those sort of moments. So example, when it's really trending down here, and we've got the monthly trend down, then the monthly trend turns up. So that's sort of a first sign things are turning around. But I'm looking at that 3 standard deviation above, and I'd really like to see it heading above there to really confirm things. And you can see that's happened there. And that's when we get that volatility breakout. Things start to take off to the upside. But remember, this is really a secondary or tertiary sort of thing that I'm looking at, those moving averages and Bollinger Bands. That's not really where the crux of how I'm analyzing price action sits. The deeper aspect is that I'm looking at these ranges and picking out those buy and sell zones for you, and talking about how price action so often shakes out investors, where you have big long trends that will then sell off and head to that area, that 75 to 87% retracement of the whole rally. And that's the area that I'm starting to look for, signs of life, where things are turning back up, and I'm expecting prices to head back to that point of control. And you can see, if we're looking at this whole wave higher from, 1997 up to 2010, that's a very long-term trend, isn't it? But if I'm looking at this way that I've split that wave up, if I'm looking at that midpoint, which is the point of control, which I believe prices often will oscillate around and revisit a lot. And then I'm splitting up the 50% area in 2 again, which creates that 25% zone. And then if I split that up again, I then get that area, which is that, 75 to 87% retracement. And on the other side, if I split that half in half, I get that 25% area. And then if I split that in half again, I get this sell zone area. And if we just look at this trading in Newcrest Mining over the past, 25 years, and look at it from that aspect, from the point of major waves, the areas, the buy and sell zones of those waves, which is where people think it looks really terrible, but where the opportunity lies, that you'll often get a reversal in that space and prices could head back to that point of control. When you start to understand that process, you can really start to get some pretty compelling opportunities to set yourself up into some good positions. So if we're following along, and the markets are granular, they aren't linear, they're non-linear. So you can go in and really zoom in, and you'll see the same structures over and over again. It's like self-similarity. Imagine looking at clouds. You can look at them from space, or you can look at them from your backyard. They'll look the same across all of those different scales. And it's pretty similar in the market, where you can go from monthly charts down to 10-minute charts and see the same sort of things unfolding. And so if I'm, looking at how the price action develops, I can be looking at these waves and zeroing in even closer, and you'll see that we had this big down wave in Newcrest Mining from 2011 to 2014, and we had the big collapse in price. Now let's analyze what happened after that. You'll see prices, first of all, rallied back to where the point of control, that midpoint, which is the gravitational point. We then saw a sell-off, prices hitting pretty much bang on the top of the buy zone there. So you can see that this area is the buy zone, and this area being the sell zone of that wave. So we're looking for opportunities where prices could reverse, change direction, and we'd have a target back to that point of control as an initial first step. And you can see that as that price action develops, we had the price action there, the black diamond coming in, telling me that there's a sell pivot taking place. So that's a shift in momentum. So I need to see a change in momentum, because prices could just keep going, couldn't they? But we need to have a sense of what does a change of direction look like. So we are starting to understand where prices change direction. And then we need to know how prices change direction. We also need to know where prices are heading to, and we need to know where we're wrong. So it all sounds simple, but that's what you need to achieve. And when you're looking at price action in this way, you can start to see it jump out at you, I guess, once you start to get the hang of it. And you can see, just following it along again, how many times prices reversed, went back to the point of control, reversed, back to point of control. And this is when we come to this example where I actually told you about it. And you can go back and look at the videos if you like. Right, and the first people to find out was actually you in this free video. And it was only after analyzing it for the free video that I started to say, wow, it is actually looking really good. And then I bought it in one of my services, and we are still long that position. It's been a great one. So you can see, if we're looking at price action in that way, and we're understanding these waves, we're understanding the fact that prices often revisit the midpoint, and we're seeing, this sell-off which happened for months, and we've got the reversal off that area, and we know that it's a spot where, so many times before we've seen that this wave structure is really working. And, if you like the stock and you like gold, the way it's looking, and, all of these other factors are coming into play. But ultimately, you are looking at this and saying, right, well, there's my gravitational point. I've got a sign that momentum is turning back up, and it's from a major zone. This being a wave that happened 10 years ago, and that prices are still in that structure. So it's like, well, if we're going up, this is not a bad spot to be finding a buy signal. And so it's, I guess can feel complex or weird, gobbledygook. I don't know what you think it is. But there are those factors all combining, the moving averages and how the trends are moving, the Bollinger Bands giving a sense of being overextended on the upside and downside, and where you'd expect, mean reversion to occur as far as the moving averages is concerned, that 20-month moving average. So you're saying, well, that's a major moving average. I expect prices to often revisit the 20-month moving average. Wherever it goes, it usually comes back to revisit it over and over. You can see there lots of price action around that 20-month. So that helps you with targets as well. But the very big picture is looking at these major waves and this sense of the midpoint, the sell zones and buy zones, the oscillation between them, which is fooling everyone on the way. And then you can start to pick out some pretty interesting opportunities. And so when you're looking at these waves and how they all, take shape, you're looking at each wave as prices rally and realizing that you often see these similarities occurring even in a strong uptrend. If I just keep looking at these waves to the upside, you might start to see that, again, this idea of self-similarity, that the same thing is going on at this micro level, where we're seeing prices rally, create a wave, back to the midpoint, the point of control, up into the sell zone, which is where the resistance is, which sees prices move back to the point of control again and again before it's ready to blast off to the next wave. And it'll take a million different forms, but look at what happened on the next wave. We've got the wave to the upside, back to the point of control, back up into the sell zone, and then revisiting the point of control a couple of times before blasting off. Amazing. That whole structure there is the same as that structure there, exactly the same. And if we just follow along to get a real sense of what we're looking at, you can see this wave was very strong, giving you a sense of just how strong this move is, that it didn't even retest the point of control before taking off to the next wave. But then the next wave did pull back, nearly came back to the buy zone of that wave. We then carry along, and you can see prices, next wave took off. Where did it pull back to? Look at that, right to the point of control, revisiting the point of control there. Where did it go up to here? The sell zone, back to the point of control, buy zone, point of control, sell zone, point of control, and then blasting off to the next wave higher. So all of a sudden, if you're starting to understand this process and you're starting to look at these waves and and really think about it, you see these things happening over and over again. Wave created, rallied back up into the sell zone a few times, back to the point of control, back to the point of control, and then took off. So hopefully that's starting to pique your interest a bit, that what we see and seems so complex with this model, which is looking at it from a few different aspects and is really a combination of all of them, can start to explain a lot of the price action, give you a sense of what the trends are, give you hints about where to run away, where the real shifts in trends occur, the areas where, volatility breakouts can be expected as volatility gets crunched like that back here. So it's, a lot of things going on there, but when you put it all together, you can start to look for these great risk reward opportunities where you're buying things, you've got clear targets, you know where you're wrong. So your risk reward is set up initially really well. And then you're trying to join, you're taking part profit at that point of control. So you're staying long and you're hoping to join larger uptrends. So you're not risking too much to find out if you're wrong. You're using the structures to help you get to a position where you've got a free option. So then you can, basically sit back and see what happens from there and not really care what happens. Sorry, Cam, could you delete that cough? So that's all I wanted to really cover today. I've been chatting away about the same thing for a while because the markets are so dead and there's not many markets out there that I'm that interested in. It's been gold and the S&P that are the most interesting charts, but it's all pretty dead just right now. I'm sure it's a bit of a calm before the storm thing, and we will see things heat up at some point. It always does. But hopefully today that has maybe answered a few questions in your mind about what I get up to and how I find these opportunities. And yeah, I hope you did actually follow this one along all that time ago and that maybe you've made a bit of money. All right, cheers. Well, I'll come back with more next week.